Welcome to the Finance and Accounting Show. Today's episode is based on an official IRS press release about a real dark web drug case involving fentanyl, crypto, and money laundering. What makes this story stand out? The IRS Criminal Investigation team played a central role in cracking the case because even illegal income is still taxable. We'll break down how the money was made, how they tried to hide it with crypto mixers, and what this means for accounting and finance pros like you. Let's get into it.
Okay, settle in, because we're about to dive into a real-world case. It really pulls together elements you might expect from like a dark web crime thriller.
Right.
But with this crucial angle that brings it right into our world finance, accounting, and tax enforcement. We're looking at a specific operation involving fentanyl dealing on the dark web.
Pretty serious stuff.
Very serious. But the real story for us, and for you listening, is how the money trail became the key to dismantling it all.
Following the money. Always.
Exactly. This deep dive is all about unpacking a really fascinating intersection. You've got serious illegal activity, the often opaque world of cryptocurrency, and the surprising yet absolutely vital role of tax enforcement agencies. Now, our lens for this investigation is an official press release issued directly by the IRS.
So straight from the source.
Straight from the source. Our mission today: take the facts presented there, understand the mechanics of the case, especially focusing on the financial side, how the money was made, how they tried to hide it, and critically, why the IRS ended up being, well, not just involved, but a central player.
Yeah.
Think of this as a specialized tax T segment. It's for you, our listeners, in accounting and finance, looking at a compelling enforcement story and pulling out those practical insights, those red flags you need to know about.
Good stuff.
Okay, let's unpack this case.
All right. So this IRS press release, it details the activities of two individuals, Holly Adams and her co-conspirator, Devlin Hosner. At its core, their operation involved selling counterfeit oxycodone pills. But these weren't just fake pills. They were pressed with fentanyl.
Wow.
And they weren't selling them on the street corner. They were leveraging, the anonymity offered by the dark web to make these sales.
Right. The dark web adds that whole layer of complexity.
Definitely. And the scale of their operation, as the source describes it, it wasn't small potatoes. They were generating hundreds of thousands of dollars from these dark web transactions.
Hundreds of thousands. That's significant illicit cash flow.
It really is. A huge volume of illicit proceeds flowing through digital channels. Now, the timeline here is, well, it's quite revealing about their persistence, maybe even arrogance.
Oh.
The press release mentions that back in September 2021, state law enforcement officers executed a search warrant at a residence linked to them. And get this, the report notes that when the officers announced themselves, Hosner actively tried to block their entry.
Trying to buy time.
Exactly. And at the same time, Holly Adams was apparently actively destroying pills by pouring them into some kind of chemical solution. They were arrested by state authorities right then.
So they were caught, literally destroying evidence.
Yeah.
You'd think that would be it, right? Game over.
You would absolutely think so. But what's quite remarkable, and it speaks to how profitable this must have been, or maybe their confidence. After being arrested and then subsequently released by state authorities, they reportedly resumed their dark web fentanyl sales just a few months later.
No way. They just started right back up.
Started right back up. But unbeknownst to them, federal law enforcement agents had already kicked off their own investigation. This went on until March 2022.
Okay, March 2022. What happened then? Was that the final chapter?
That seems to be the decisive point, yes. Federal agents executed another search warrant. This time, it was at a temporary residence, a hotel room where Adams and Hosner were staying.
Ah, so they were mobile.
Seems like it. And the outcome of that search was substantial. Officers seized nearly 1 kilogram, almost 2 pounds, of those fentanyl-pressed oxycodone pills, plus about 60 grams of methamphetamine. Yeah. The second encounter led to the federal charges, and ultimately the convictions and the sentencing that the press release talks about. The sheer audacity of returning to the exact same illegal activity after that first arrest, it really underscores the level of this criminal enterprise.
Absolutely. It just highlights the persistence, the scale.
Yeah.
But, like we said at the start, the really fascinating angle for our audience isn't just the drug crime itself, it's the money.
Right.
The source explicitly states they generated hundreds of thousands of dollars. That's the financial engine, driving this whole thing. And the press release focuses heavily on a second major charge Holly Adams was sentenced for, conspiring not just to distribute fentanyl, but also to launder the resulting proceeds.
A laundering piece. Crucial.
Exactly. So this wasn't just like cash under the mattress. They were actively engaged in some pretty sophisticated efforts to hide where that money came from and where it was going.
Precisely. And the press release actually gives us specific details on how they attempted to launder that substantial amount of money. It mentions the use of cryptocurrency mixers, wallets, and other online tools.
Mixers. Okay, let's talk about those.
Yeah. What's fascinating here is how they leveraged these specific digital tools in an attempt to make the money trail essentially disappear. So cryptocurrency mixers, sometimes they're called tumblers. Basically, these services pool together crypto from lots of different sources.
Okay.
They mix it all up, jumble it, and then redistribute it in different amounts, different transactions to various destinations. The explicit purpose, I mean, the whole point, is to break the link between the original source here, the illegal dark web sales, and the final wallet.
So it's like trying to follow one specific drop of water after it's dumped into a river.
That's a great analogy. It's exactly that, trying to make it untraceable.
So they're deliberately creating complexity, adding layers of anonymity.
Exactly. Combine that with using multiple wallets, likely bouncing funds between different digital addresses over and over, and whatever those other unnamed online tools were. The goal was clearly to obscure the origin and flow of the funds.
Building a maze.
Yeah, a financial maze. A layer of obfuscation to make it incredibly difficult for anyone, especially law enforcement, to trace that dirty money back to the crime that generated it. That's the heart of money laundering, right?
Yeah.
Taking dirty money and trying to make it clean, or at least untraceable.
All right, so we've got this picture. Serious dark web drug operation making hundreds of thousands in untaxed income using sophisticated digital methods like crypto mixers to hide the trail. Now, this whole story comes to us via an IRS press release. And I think for many listeners, especially those who maybe think of the IRS mainly for tax returns, audits, this raises a big question. Why was the IRS, the tax agency, involved in what sounds like a drug trafficking and money laundering case?
That's the absolutely crucial piece, particularly for professionals listening. Why the IRS? And the press release clarifies their involvement by detailing the investigative team responsible. The Northern California Illicit Digital Economy Task Force. They call it NCID.
NCID. Okay.
And the source lists the agencies that are part of this task force, highlighting, this wasn't a solo IRS show. It was a multi-agency team. You had agents from IRS Criminal Investigation, that's IRS-CI, working alongside Homeland Security Investigations, HSI, the FBI.
The big players.
Yeah, and also the U.S. Postal Inspection Service, the USPS Office of Inspector General, and the DEA. The press release notes this specific task force, NCIDE, is focused on targeting illicit dark web and crypto activity.
So a specialized unit for this kind of crime.
Exactly. And here's where the IRS's specific role gets crystal clear. The press release explains that IRS Criminal Investigation, IRS-CI, it's the law enforcement arm of the IRS, their job is to conduct financial crime investigations across a very broad spectrum.
Broader than just taxes.
It's much broader. Yes, tax fraud, tax evasion, that's their core, absolutely. But the mandate explicitly includes narcotics trafficking, money laundering, public corruption, even terrorism financing. All sorts of financial crimes.
Okay.
And there's a key detail in the source that explains their unique power here. It states that IRS-CI special agents are the only federal law enforcement agents with investigative jurisdiction over violations of the Internal Revenue Code.
Ah, okay. Now it clicks. Especially for our tax T focus. That makes perfect sense. Because even income from illegal sources, selling fentanyl on the dark web, that's still considered taxable income under U.S. law.
Bingo.
The hundreds of thousands of dollars these individuals generated. From the perspective of the tax code, that was income. Income that should have been reported, should have had taxes paid on it, but obviously wasn't.
Right. The ultimate unreported income.
So the IRS gets involved because these incredibly profitable illegal activities generate huge streams of untaxed income. And then the criminals' efforts to hide and launder that money using tools like those crypto mixers we talked about that directly attacks financial transparency. Hiding the money isn't just about hiding the drug crime. It's also about hiding the taxable income. And that falls squarely within the IRS's mandate. Investigating financial crimes, violations of the tax code, which includes failing to report income no matter how you earned it.
Exactly right. If we connect this to the bigger picture, it really demonstrates that the IRS, through its Criminal Investigation Division, plays this vital, often leading role in investigating serious criminal enterprises that make a lot of money.
So they follow the money.
They follow the money. Their unique jurisdiction over tax law, combined with their specialized expertise in tracing complex financial trails, which, let's face it, are increasingly digital and involve crypto, makes them indispensable. They're often the lead agency or a critical partner in these multi-agency task forces targeting sophisticated financial crime, even when it's linked to things like drug trafficking. Because the money trail is often the weak link, the most vulnerable point in these operations.
Okay, this case, as laid out in the IRS release, it really offers some incredibly important practical takeaways, especially for accountants, financial professionals listening today. This is where our tax tea really gets brewed, right? Looking at real enforcement, finding the lessons.
Absolutely. And drawing directly from the facts and outcomes presented right here in this press release, there are several key points that should definitely resonate with professionals.
Let's hear them.
First, and it sounds basic, but it's critical in this context, illegal income is taxable income. Those hundreds of thousands from dark web sales. Dirty money, criminally speaking, sure, but still income subject to tax under U.S. law.
Even if the main charges are drugs and laundering.
Right. The underlying tax liability on those hundreds of thousands, that was a key reason, a hook for IRS involvement. It's part of the financial crime picture they investigate. It just reinforces that no matter the source, income has tax implications, period.
Okay, fundamental but crucial. What else?
Second, the press release specifically calls out the tools used for laundering. Crypto mixers, wallets, other online tools. For professionals, these specific methods, they should immediately register as significant red flags.
Big red flags.
Huge. The entire purpose of a mixer is obfuscation, hiding things. So if you encounter client transactions involving these types of tools, especially mixers, or maybe weird patterns of moving funds through tons of different wallets with no clear business reason, it's a strong indicator. It suggests the client might be trying to hide the source or movement of funds.
Potentially illicit funds.
Potentially. It absolutely demands heightened professional scrutiny, much more due diligence. You can't just ignore it.
Makes sense. Third point.
Third, look at the structure of that NCID task force. IRS-CI working shoulder to shoulder with the DEA, FBI. It powerfully illustrates that following the money trail is central to investigating all types of serious crime, not just plain old tax evasion.
Yeah.
The IRS-CI's specialized skills in financial tracing, including their growing expertise in crypto forensics, are essential for uncovering the hidden financial plumbing of these operations. It really highlights the expanding role of financial investigation across all law enforcement.
Okay. Financial trails are key everywhere. Got it.
Fourth, the stakes are incredibly high. The press release mentions Holly Adams got a 12-year prison sentence. 12 years.
That's serious time.
It is. And it's crucial to note that sentence covered both the conspiracy to distribute fentanyl and the conspiracy to launder the proceeds. This shows that financial crimes like money laundering linked to other illegal stuff, they aren't treated as some secondary minor offense by the feds.
They take it very seriously.
Very seriously. They're actively prosecuted, carry severe penalties. It underscores the government's focus on disrupting the financial side of crime. Laundering is seen as a direct attack on the whole financial system's integrity and transparency.
Okay, severe consequences. Anything else?
And finally, number 5. While the press release doesn't explicitly say, hey, accountants do this, the whole nature of this hidden financial activity and the IRS's focus on uncovering it implicitly underscores the critical importance of professional obligations. Things like know your client KYC principles.
What? KYC.
When you're dealing with complex transactions, opaque ones, especially involving crypto or tools designed to hide things, like mixers, professionals have a heightened responsibility. You need to understand the true source of the client's funds, the real nature of their financial activities.
You can't just plead ignorance.
Exactly. Ignorance isn't a defense. If you end up facilitating the movement of illicit funds, even unknowingly because you didn't do your homework, the consequences for the professional can be severe. It just highlights the need for really robust due diligence, especially now with complex digital finance.
Wow, that really brings it home. So for professionals listening, the core takeaway from this case, this IRS story, is a stark reminder. Be acutely aware. Watch out for unusual, overly complex financial activities, especially those involving digital tools built to hide money, like crypto mixers. And understand the IRS is a major player. They have unique powers. They're investigating financial crimes linked to any illegal activity, using their expertise to follow the money, using tax law as a powerful tool.
Yeah, and this raises an important question, for accountants and financial professionals listening. As these methods for hiding money get more sophisticated, more digital, How can professionals actually stay ahead of the curve? How do you identify these red flags, fulfill your due diligence, and navigate this complex, sometimes really opaque financial landscape?
Absolutely. That's the challenge. So what does this all mean? For you, the listener, especially if your work touches client finances, digital transactions, potential tax issues, this case is a concrete example. Law enforcement, including the tax authorities through IRS-CI, they are actively and successfully pursuing these financial trails, even into the dark web.
They're adapting.
They're adapting.
Yeah.
The techniques to hide money evolve, but so do the methods to find it. This story just reinforces that critical need for diligence, for transparency, and for a deep understanding of the methods used to obscure financial activity in your own practice. It's not just about compliance. It's fundamental to safeguarding the profession.
And maybe a final thought to leave people with. Consider how this rapid evolution of digital finance tools, we talked about crypto and mixers today, but think about decentralized finance, DeFi, other innovations coming down the pike, how this will continue to create new, sophisticated challenges. Challenges for those trying to hide money, sure, but also for those tasked with uncovering it. What does this ongoing arms race between financial obfuscation and enforcement mean for the future, for financial transparency, and for the role of professionals like you within it?
Thank you for tuning in to another episode of the Finance and Accounting Show. If you like what you heard, don't be selfish. Make sure you hit that subscribe button and then share this with a friend, because you know a business owner that could definitely use this insight. So be sure to hit that subscribe button, share it with a friend, and turn on the notification bell so you get all the updates when we release a new episode.